Friday's sell-off was one for the books, and right on cue, the Black Monday calls are coming out left and right, as are the AI bubble popping, and this is going to be worse than 1929 posts. So I figured I'd contribute with the title of today's video. However, in reality, some of the charts really don't look that bad. Now, don't get me wrong, many charts are just outright broken, but there are a handful that are okay. And of course, that's where we should be focused. Some of the leaders could really use new bases to set up new trades from. What we don't want to see is a repeat of October 10th from last year, the day the momentum market died. So welcome back to the Trade Brigade Weekend Show, where we'll take a look through all of the data points and we'll build a logical trade plan. My name is Matt, and if you're new here, hit the thumbs up button and subscribe. For additional resources, check out the links listed down below in the description, and stay tuned until the end of today's show. I've got 6 additional trade ideas to share with you that you won't want to miss. With that said, let's jump right into the charts. So we'll kick things off on the SPY weekly time frame, talking about candle structure and location, as we always do. In terms of structure last week, we're left with a solid red-bodied bar, which is a character change. We haven't seen this since the low was placed back here in late March. So solid red-bodied bar closing weak on the lows just tells us that sellers are absolutely getting aggressive here. In terms of location, notice that on the bar-to-bar, you did set a higher high, meaning that this is a failed breakout. We've closed firmly by setting a lower low underneath the previous week's range low, and honestly, it starts to look like a 2-bar breakout failure, right? Look above and fail back to the range low. So in the short term, yeah, absolutely bearish action on the weekly bar to bar count. However, if we just pause and take a 90,000 foot view, has this really done anything to change the weekly trend? And of course, the answer is no. Intra week, we've set a brand new all-time high, which means that we're pulling back from the highest high in the weekly trend count. And we know that there's plenty of room for a weekly higher low. We've really been talking about 2 levels here on the channel for the past handful of weeks. The first one, which is closest, is close to that 712.40 spot. And as we know, if we break out the Fibonacci's coming in from the low up to the new all-time high, it's right there. It's right in the neighborhood of the Fib 38.2, which typically qualifies as bull flag consolidation. Now, how do we get there? It's probably a breakdown underneath the 2-week equal lows, which is closer to about 730. We'll get more granular on the daily chart in just a second. But if the daily trend is going to flip to down, then we satisfy the conditions of possibly setting a firm higher low on the weekly. So something that looks like this and then reversing back higher, something back up towards the highs, would make a ton of sense for a weekly higher low. Once again, in the neighborhood of, let's just use round numbers, 710 to 712, great spot here on the weekly timescale, and we'll see some structure there on the daily as well. As the weeks continue to pass by, obviously the weekly 20 SMA may meet us there for confluence of support as well, and I'd like to also offer up that if you throw on an anchored VWAP, from the low of the move, this anchored VWAP right here is perfect confluence headed into next week with that 710 area. So in my book, this is the ideal spot for a weekly higher low if we do continue in the downward direction. And once again, the unlock for that is breaking down underneath the 2-week balance range lows. If we take that 730-ish area out, yes, I would start looking for something deeper towards about 710, 712. The one thing I will say is, even if the market overshoots that level, how many times have we talked about prior as well that the second level here, not just the 710, 712, but just 700, the round figure, the previous all-time high, that's not just a weekly higher low, it's probably a monthly higher low at that as well. It's roughly a 50% retracement of this move, and I think that a lot of people just structurally would be willing to buy that previous all-time high retest. It's a pretty classic setup in the market. It's been working fairly well over the last handful of months, dare I say. Let's jump in here with the volume profile also, because this will just sort of illustrate, as we could see here, that if we do take out the 2-week equal lows back there, that 730 shelf, there's really a low volume void until we come into that 700 previous all-time high test. Now, again, I'd personally like to see this area at least offer something around the 710, 712s, but from a volume structure perspective, 700 would make decent sense as well. The last thing I want to do here on the weekly timescale before getting more granular on the daily is look back at the October bar, October 10th of last year, right? So the structure is kind of oddly similar. If you look at this as a 2-week balance range, we tried to break out, we failed back down to the low. And if you recall, this was based on the catalyst of a misunderstanding about the China tariffs, right? Donald Trump said something about, oh, we're putting the China tariffs back on. They're going to increase like after making that deal to make a deal, right? And then it was like, oh, it's a misunderstanding. Well, this time around, what was the catalyst? It wasn't tariffs, although we did get those metal tariffs. It was just the labor report. So the labor report came in way stronger than expected. The Fed's not going to be supportive and lower rates as quickly as maybe the market would like. And we find ourselves back at the equal lows. Now, what's the illustration? We never took out the balance lows back here in October of 2025. it just, to me, would sort of reinforce the idea that, yeah, this is a failed breakout, but there's nothing saying that the market needs to just crash and burn and, oh my goodness, we're going to go to zero. Would a pullback be healthy? Would we get some new setups out of a deeper pullback here? Absolutely. But just keep in the back of your brain that, market history just proves you don't have to break that 2-week equal low. So if you're getting overly bearish from a higher time frame perspective, if you're sitting here saying, oh my God, again, it's a Black Monday, it's going to be an AI bubble popping, just Armageddon sell-off, 1929 Great Depression, just like, heads up, history says like chill out for just a little bit before the weekly trend actually flips to down. So rant over on the higher time frames. Let's drop it to the smaller time frames. Let's get granular here and see exactly what's going on. We always start with the weekly expected move. It's contained on the screen. It's not projecting out to a new brand new all-time high. If you're not familiar with the expected move study, check out the video tutorial in the top right-hand corner. It'll show you how to set this up and what it all means. For the most part, if we're contained by the upper bound, the number is 757.38, you can see that as a lower high versus the all-time high. Not the end of the world, but a little bit concerning. It's no longer just a clean uptrend forecast or indication here. The lower bound undeniably is the more concerning look here. That's 717.72. That would, of course, imply a breakdown through the 2-week balance range lows. 732.25 is the more precise hourly level, and that, of course, brings us a what? That brings us a lower low, right? Because this was the last major higher low in the daily trend count. And speaking of daily trend count, this is the highest high. You pretty much have like overblown all of the opportunity for a clean higher low. Could we split hairs and say that, yeah, there's still a chance for a higher low here as long as we don't touch 732.25? That's fine. And let me maybe just clear this up. You could still say low, potential for a higher low pulling back from the highest high, but the damage has been done. It would sort of be irresponsible at this point to not acknowledge that, of course, on the Friday session, there's a change in character from the market here. In a picture perfect world, and we talked about this as being the base case on the Wednesday analysis, right? In a picture perfect world, we got a multi-day drift to the downside, very gentle, very controlled. We were looking for support over the previous left side peak, the 748.75, as well as the daily 20 SMA as that slowly perhaps came up and curled near the level. Now, obviously, that's not what took place. We also did not respect the top end of this level, which could have offered the overshoot higher low at 743.50. So with the character change on an increase in volume here from the market on Friday, I think it's worth being more open-minded to two-sided trade as we move forward from here. I think, yes, a lot of people will be looking to go out there and buy the dip, but I think the right approach is to say, okay, yes, stronger dip, but how am I going to get involved? Am I going to just buy this blindly as it comes into support? Am I going to look for look below and fails? Am I going to look for the gap close? Am I going to look for the 50 SMA to come into view? Are we going to bounce, base out, and then develop a new uptrend off of the 50 SMA? Those are sort of the places where my head's at as it relates to the pullback here as of last Friday. If we do start to see just, look below and fail in here and a quick retracement back up to these highs, I think you want to try to be long for that, right? Off of this key area of support, not breaking down through the weekly equal lows, but you would probably want to treat it as maybe a dead cat bounce first, trim profits aggressively into this particular area here, just in case, as we talked about, this is the back pocket situation we talked about on Wednesday, God forbid that rolls over there. For now, you have a firm daily lower high. Now you're dealing with a daily trend reversal. The lower high after an equal low, for all intents and purposes, puts the threat on. And, of course, pattern traders rejoice. Here's your head and shoulders under the neckline, and you drop that weekly balance range low. It's, I don't want to say game over, but the weekly can certainly pull back more aggressively. And that's where you get that deeper pull towards that 712.40, the structural level we were just talking about with the fib 38.2, the anchored VWAP, and the high volume node ish. Through that little blip. If you go back, you could see what I'm talking about, right? If I just scrunch this out a little bit, you could also see it's a breakout level, right? This is that little breakout level that offered up that next leg higher. That would be a structural element where, once again, I would be open-minded to, if the daily trend flips to down, is there a weekly higher low at this particular location? So that's really it from a daily time scale perspective. Let's drop it on down to the hourly chart. Let's take a look over here because there's a number of different things that we could parse out. The biggest thing is that, again, the change in character was notable on Friday. Instead of just some gentle sell-side pressure getting lifted off of key areas of support, there was total disregard for most levels of support, right? You came down onto the gap here at the previous day's low. And by the way, whenever you gap red under green, always a day to make note of, because it means anybody who purchased the prior day is technically wrong. Even if you nailed the low of day, you're wrong when you gap red under green, right? So a lot of pressure just from that perspective after what was perceived as in my opinion, like we were saying, oh, the gap down maybe is the pullback. That's it. You got a decent close there on Thursday. So kind of nasty. I mean, you could play some fun and games and say, oh, they let the non-PDT players, now that they reversed the rule, get nice and long on Thursday just to unwind it on them on Friday, right? You could say, oh my goodness, they're grabbing liquidity so they could go out and buy SpaceX this upcoming Friday for the IPO, right? There's a number of different ways you could twist this, but regardless, looking at what price did at most of the inflection points where I would have expected some kind of reaction just tells me that, yeah, the dip buyers did not step up at all on that Friday session. This was a sell, 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 sell everything on the Friday session. There's just no semblance of at least a tech rotation that was going to keep some sort of buoyancy for the market. So as it relates to the hourly, undeniably, the trend is down, right? The first thing I would be thinking of is if the market tries to rally, an hourly lower high that's set in here and H patterns back down to the low, at least get to your daily equal low. That's going to be that 732.25. If you look below and fail that, and the hourly trend can flip back to up, maybe this is left head and then we get a right inverted head and shoulders, that hourly trend change is where I would start to say, okay, placing the daily equal low, right? And possibly trying to aim for this. As we know, we're going to reevaluate at the scene of the crime, basically the origin of the breakdown. And if we can blow through it, great, bulls on parade. Let me actually scoot this over so we got a little bit more room to draw with these crayons. If we do some, so what would let me start with the base case, right? Any rally attempts after the big sell-off, right? I'm looking for a lower high attempt in here. Can we get a lower high underneath this area, underneath the daily 20 SMA? 743.50s, right? Wouldn't be unreasonable after a down almost 2% day from the opening print, not previous day's close. It's worse from previous day's close. After that big down day, can you get sellers who are short late to the party in here? Do you pinch them out? And then do you set the hourly lower high underneath the 20 SMA? Right, something that looks like that going forward. In which case, yes, daily equal low here, that neutralizes the daily trend, right? Equal low from a daily perspective there. If we can look below and fail that level, great. The hourly trend reversal back up starts to place this for what? A rally back up towards this location, the scene of the crime, right? And even, if you're trying that hourly trend reversal, perhaps it looks something like this. You move into this level, you pull back. This sets it up, right? There you go, larger inverted head and shoulders. We're just playing some possible outcomes of what could happen here, right? That reversal, I would certainly target the highs of this range, reevaluate here, bulls on parade if we accept above. If we reject, caution the daily lower high, I would expect lower in the future, right? That's sort of the base case pathing that I'm looking for here early in the week if we rally first. If we don't rally first, if the market opens weak, let's say it gaps down, I would not be looking to short this in the hole. I would be looking to get long almost immediately on a gap down stretch into this level if we see the right intraday setup. And I'm not just market buying this thing at 9:30 on Monday. But if we see the right setup, look below and fail of the level, reclaim the opening print or something, I want to get long to try to trade for the 20 SMA retest from the bottom side up. I'm an aggressive profit taker here. I'm reevaluating in a picture perfect world. Yeah, higher low, and then we're off to the races, right? And everything's great and dandy and the bull market run continues. That's one way to do it as well. Of course, stopping out if this comes back down to the low, in which case, through here, then it becomes more about trying to close the gap, also breaking the 2-week balance range low and seeking a stronger daily downtrend, right? If the market extends on a gap down here and we get this to start the week. Again, I don't want to be short in the hole down here, but what I will be looking for is if we do stay underneath that 732.25, lower high here places the bears in control underneath the 2-week balance range. That is more interesting if I'm going to look for a short. I'd rather let the market come in, set a meaningful lower high under a notable reference point, and then I can manage my risk off of that level, right? So that's what I'm doing here on the spiders after a session like what we had on Friday. Let's quickly hit this with the intraday anchored VWAPs. Show you these real quick. The main ones that I'd be concerned about here are the all-time high anchored VWAP, Friday's anchored VWAP, and then really the April gap up anchored VWAP down here. If the market's going to be Armageddon underneath the 2-week balance range low, again, 732.25, that's where I'd be looking for this. That's where I'd be looking for the overshoots, down for that daily trend reversal, weekly higher low down here. You can be bearish to get there, but on the higher time frames, try to remain constructive. If the market's going to just rip, once again, let's just say that perhaps it's here, right? And we're not rejecting the anchored VWAP from Friday. We're not rejecting the anchored VWAP. This is going to barrel down like this and then start to flatten, I guess, depending on price, of course. But if we're not rejecting that anchored view app, if we're just ripping through all this stuff and reclaiming this level here, 748.75, really difficult to maintain any sense of a bearish notion, right? So that's kind of the levels. Let's hit this with a couple of fibs as well. Let's come in here and a couple of game plans, really. If we just do this, the Fibonacci retracements that matter most, I think make good sense here, right? That Fib 38.2 from the all-time high to this pullback low of Friday, if the market is extended, comes back in, this is that neighborhood where you'd start to look for that lower high. Makes really solid sense. If you start to get up and over the 50% retracement, bears don't really love to see that, and the icing on the cake would be over the 61.8, of course. Then we'll just finally apply it just to the Friday session, get a sense of what's happening here. Yeah, 50% fib, I think just reinforcing a little bit of this 743.50. Remember, Fibonacci's are just reference points. They're nothing crazy. It's not magic levels. Let's come in here from the lows up to the highs just to call out that, yes, 61.8 could be confluence. Again, stretch, rebound. You reject that, you're just setting a lower high underneath what I would say is going to improve the odds for a 100% retracement. 38.2, if it's reclaimed, something that's maybe strong out of the gates, and then a reclaim, that would certainly be more helpful, right? So that's all on the fib front. What we can do, and what might be fairly interesting as a matter of fact, and I haven't looked, so we're going to do this in real time. Let's go back to the April bar, or sorry, not April, but rather the October bar from last year. And I just want to point out maybe how there was two-sided trade after that, right? Had a little bit of a bounce here. This was an inside bar. And the tough part about this was just you had inside weeks, really, right? So you had this inside bar. The gap down got bought aggressively off the 50. This gap up then faded. So my illustration here is that expect two-sided trade. I would be taking it as a signal from the market if we immediately get back, like snap right back into an uptrend, the dip is bought, and we're just in a methodical, algorithmic bid back through the highs. If that happens, you better take that as a signal to say, okay, let me put my bear hat away. I'm not going to try to short all-time highs. Don't try to step in front of the moving freight train. If we get more two-sided trade like this, which wouldn't be unreasonable, then I would try to just remain very open-minded to day trades. That one's kind of a tongue twister. Open-minded to day trades. Open-minded to day trades. And then on the swings, look for this to set up a new base, right? Where's the swing long here? It's probably either a look below and fail on the range low, or you're patient looking for the tight setup near the top end of the range. How can you buy this on a 20 SMA look below and fail here, get a stop there, anticipate the break, and be long through the range high, right? That's another way to get involved. So, of course, we know what came after that. A little bit more turmoil from the market here. We, of course, know that we kind of killed the momentum market on that move. NVIDIA earnings over here killed it again. Then we were stuck in purgatory for quite a while. We want to avoid that from the market. So far, based on the earnings numbers, I think that the bull market is a little stronger. At least it's got a revived tailwind behind it. And we'll see that on fundamentals in just a second. But I got to get going through some supporting evidence here. What do we see in the market internals? If you're not familiar with market internals, check out the video tutorial in the top right-hand corner. No doubt about it, higher volume outflows on the Friday session. The advanced decline line, not that bad. On a Friday session like this, you'd be like, oh my God, I'm not going to be shocked to see this thing pinned at negative 2,000. I mean, it's bearish, don't get me wrong, but it's not pinned at negative 2,000. Not everything was getting sold off. The cumulative build speaks for itself. That's super bearish. Remember, the net read that makes it substantial is 5K, could be plus or minus, closed out negative 7,400 on that Friday session. So yeah, there's some exchange level selling here. It's not like this is the same thing that we've been seeing as of late, right? So market's changing character. I think being open-minded to that two-sided trade just gave a bunch of pathing ideas as to how I'm going to approach this headed into the Monday session, and whether or not we just sort of like sweep the lows and stay bullish, rally reject for a lower high. Where do things change? We kind of know the two key inflection points, 732.25, this in here, 743.50, and absolutely 748.75. So with that, we'll go on over the ES futures from the market profile perspective. Let's get to the ES, not the Russell quite yet. We do have a pretty drawn out range, of course, naturally on that Friday session with a number of different single prints. So I would really group this as a triple distribution. There's three main chunks of value. You have value here, you have value here, and you have value here. Right. And so on Monday, depending on where we open, that's going to tell me something about how participants react over the weekend, or basically how bullish or bearish people are feeling about the labor report. Is this just a capital raise to go dump it into SpaceX? We'll see. If we open in the mid, that's just about as neutral as it gets. We're underneath some reference points, but like bears could not continue the auction through the overnight, right? And therefore, if we open in the lower third or below the lower third, naturally just bearish there. If we open in the upper distribution, then oh my goodness, what are you doing short from the lows? This thing's going to ramp, right? These shorts, as the kids would say, are going to get cooked, right? So shorts late to the party probably get really steamrolled and hurt on any kind of open in that upper distribution. And again, we'll cover all of this in the pre-market prep come Monday morning, but just understanding where that open is will hopefully keep you on a little bit more of the right side of the trade, right? If you're up here and you're looking for aggressive new shorts, I think it kind of misses the point that shorts are actually underwater getting hurt and you do have some potential to squeeze. Versus if you're opening down here and you're trying to look for longs, it's like, yeah, maybe look below and fail. But if you're immediately just trying to buy it off the open, you're missing the point that there's still overhead supply here, overhead supply here. These shorts feel fine, these shorts feel fine, these shorts feel fine. It's more about the positioning of the players, less about, oh, it's on sale down at the lows, right? So that's my interpretation, at least, of the ES. If we do just zoom out a little bit here, I think it is worth calling out. We have an unrepaired poor high from the Thursday session. And just once again, I think it's fairly obvious, but character change, value area is lower, breaking away from that consolidation. What I might just offer up as being interesting, I don't know if it's the end of the world, but it's interesting. Value is elevated on the Friday session rather than, maybe it's still, a majority of the session, but why does it not look like this? Why don't we have value area low closer to the bottom end of the range? Why is the point of control in the midpoint of the range, it's literally at half back here versus flipping down here to really indicate that people do want to transact on the lows? Are we splitting hairs here? Probably, right? It's like it very easily could have been a point of control flip, I'm sure, but it's just a small nuance, something to have in the back pocket. Let's get on off this market profile. Let's go take a look at the NASDAQ side of the market. Let's keep this show on the road, and let's see what's going on with our friends on the NQ side of the marketplace. Clean drawing set. Let's just hit this with some moving averages on the weekly and get the job done here. So in terms of weekly structure, rinse and repeat of what we just covered on the spiders. Failed breakout in the upper wick, close incredibly weak on the lows. Notice that there's even less lower wick on the QQQ. Just means it's more bearish, right? There's no sort of pushback. There's a little lower wick, but there's very little pushback in the NASDAQ versus the S&P, which tried to get a little lift at least. Nonetheless, bar to bar count, failed breakout, weak close, not underneath the 2-week equal lows. Same concepts as the S&P. I'll try to keep it a little bit briefer through the NASDAQ, but I will get you all the right numbers. Fib 38.2 in the neighborhood of 675. That's a nice structural level in there. And the break of the 2-week equal lows closer to 695 would open the door for that pullback to get a little bit deeper. And of course, the previous all-time high in here is closer. It's actually perfect confluence with the 20 SMA on the weekly chart right now, around that 638, 640 spot. So those are the two big pullback levels, 675 and then 640 on the weekly time scale. That would still produce a higher low. Once again, the trend remains intact. This is the highest high. We're pulling back. It's very possible the market's seeking a higher low on the higher time frame. Let's clear that up. Let's go ahead and hit it with the anchored view apps for the NASDAQ. And lo and behold, if I just actually put the fib back on there, here we go. It will start to become confluence just like the S&P over the next handful of weeks. 675. These things are so close in price these days. It's getting them twisted up. Anyways, 675 area on the Qs. Let's go ahead and hit this with a volume profile just to make sure we could see the same thing. There's your volume shelf. Anybody shocked it's the bottom end of the balance? Not really. Let's take this thing down to a daily chart. Let's see what we got going on over here. First things first, weekly expected move. As we take a look at this, there is the range upper bound 731.25. Give or take. 731.25. What's the actual number? Let me hover the cursor. 731.54 in that box. 731.54 right here. No doubt about it. Lower high versus the all-time high. This low is at 678.58. No doubt about it. Lower low based on the 2-week balance range lows, right around that 699.700 we were just talking about. If we break that, once again, your 675 area is a little bit further north of it was not as much of a consolidation on the NASDAQ versus the S&P at that 612.40 spot we were talking about here. You could see the Fibonacci and the anchored VWAP is actually closer to this 2-day balance range breakout, which of course led to higher. It's still structurally relevant, and perhaps the daily 50 SMA will come up and meet us in that neighborhood. Just like the S&P 500, no doubt about it, change in character here. Left side peak on the daily chart would have been ideal for some kind of a gentle pullback. Offer some support, daily higher low continues, not the case. On the hourly chart, we'll see the same exact thing. The pathing will really ring the same. Generally speaking, an open that's a gap down, look below and fail 699, the multi-week balance range lows, looking for counter trend In here would be the first spot that I would primarily look for. That's going to be 714.65. You could start to then say, okay, are you going to get a lower high in there? In which case there's the daily head and shoulders. That's keeping price underneath 722. The other thing I'll point out, there's a very nuanced unfilled gap in here. No gap fill reversal response on that Friday session. Just blew right through it on, I mean, you had a little early morning response. We're talking 2-minute bounce, 5-minute bounce off that level, but higher time frame wise, just straight through it, knife through butter, right? So lower high there sets your head and shoulders and whatnot. But again, this is probably longable here if there's the correct failure pattern and intraday setup for a red to green move, right? That's primarily, you're going to hear that probably a lot online for anyone who's serious about trading and not just like panicking and saying, oh my God, it's going to crash. You're going to hear red to green, right? If you can go red to green after a day like Friday, here, red to green is probably long for a squeeze, even if it's just short-term counter trend trading up into the 722, and then we reevaluate. Obviously, the more bullish outcome here is just a reclaim of 722, then you're probably talking about that algorithmic bid just stepping back up and trying to send prices higher, in which case we should respect that, right? So that's that one. Generally, same ideas. If the market opens higher, I would be open-minded to a short first rather than trying to get long, right? If the market's going to open somewhere in here and yet we rally and just stuff at 722, I'd be open-minded to the short risk, maybe like that, reward back to the open, something like that to follow through towards the lows. Generally, that's the range I would try to trade for. I will respect if the market does this and just, completely wipes out sellers. But if it's a move to open higher, short first. If it's a move to open lower, red to green move is where I would look for longs and then reevaluate here, right? If it's a break, let's say we gap down, break to close this gap, very tough to try to short that in my opinion. I think, if you're going to do it with momentum, just make sure you understand your risk on, let's just say a Monday gap and go attempt. If they're going to continue to sell this thing off, I say they, but I just mean overall, if the market's going to continue to sell, in here, it's tough to short. You're getting short in the hole. Understand your risk, understand your stops. If you're someone who does not stick to stop losses, you'll get seriously hurt trying to short this if it goes, reclaims the open and squeezes out shorts. You'll be part of the short squeeze, right? So if you're bad at sticking to stop losses, that's not the trade for you. Wait for it to come into the gap, wait for some sort of a reference or whatever, counter trend bounce. If you then struggle 699, that's the 2-week balance range rejection, right? Then we're talking about the deeper weekly pullback, towards this 50 SMA. There's the more structured portion at 664.55, and here's that 675, which was the fib and anchored view app, all right? So that's some pathing, that's some game planning for the NASDAQ. Speaking of anchored view app and fib, let's throw it on from an intraday perspective. You could see, once again, this is why I think you should be respectful of that 714.65 first. If we do get this, right, first here, and then look for something to fizzle out. If you just reclaim it, that's a notable move over the anchored view app from the Friday session. If we go ahead and throw on the Fibonacci's from, let's do all three of the same perspectives on the NASDAQ, there to there, 38.2 right here means that this, if we do bounce it or whatnot, that is bear flag consolidation as it relates to this range right here. If we can reclaim the 61.8, reinforcing that 722 makes good sense there. From the high down to this low, you can see the fib 38.2, 722, great reinforcement there. That rejects, awesome lower high. If it reclaims, now you're in business, right? Let's clear that up. Let's come in from the major low up to the high, and lo and behold, a lot of the same stuff. It's it's nice to see it, but hopefully nobody's like too flabbergasted and like, wow, the numbers are perfect, right? Just reinforcing that we're at least looking at the right spots here in the market. Let's go ahead and clear this up on the Qs. Let's jump on over to the NASDAQ side of the market internals and see what we got going on over here. Just absolute Armageddon on the NASDAQ here. I mean, don't even take a look at the TQQQ. Obviously the SQ's up big, but the TQQQ is being triple leveraged. Ouch, not a good session over there. The SOXL, ouch, not looking so hot over there. But huge volume outflows. This to me looks like overcorrelation. Look at how bearish the advanced decline line is here, closing at negative 2,500. Overcorrelation there. Everything got sold as it relates to the NASDAQ side of the market here. The cumulative build, usually we say negative 6,000. We give it a little bit more than the S&P, or the NYSE side, I should say. It's negative 16,500 on the cumulative tick for the tick Qs. I don't know actually if I've seen a bearish read like that in a very, very long time. It's been a while, right? So big over correlation Is it oversold coming into Monday becomes the question, in which case, that's why I've been sort of reinforcing this idea. Any serious trader out there is probably looking for a red to green move, even if it's just a counter trend long for, that session. If you could be long for that session, leveraged with options, intraday, futures, whatever. If that's what it takes, then sure, red to green there after an oversold situation, I think gets a little bit spicy, and the internals do support that idea. Let's jump on over to the NQ side of the market profile. And what do I want? That arrow is the one I want. There we go. Same thing. Notice here that the point of control did drift lower. This is honestly what I would have expected out of the ES. You could see it here in the NQ. Same concepts. 3 different distributions. Generally, where are we opening? And I will have you covered on Monday morning. Show up to the pre-market prep show here on the channel, 8 a.m. Eastern time, every single morning the market's open. If we open in the middle, top, or bottom, I'll let you know. Obviously, you could just eyeball it as well. But if you want to be really precise with the actual single prints, I'll have those numbers for you on Monday morning's open. Let's go back on over the platform here. Let's take a look through everybody's least favorite index. I don't know why, but nobody seems to give the Rusty Russell any love. Let's take a look at the weekly chart to start. We'll go through the top down here and see exactly what's on tap for the week ahead. IWM, certainly same candle structure. And another thing that you'll see, this is fairly typical of, quote unquote market crashes, but correlation starts to spike, right? We had a really uncorrelated market for a while, or at least, if you think about dispersion, and a lot of people have been talking about this dispersion trade, a lot of under the hood volatility, but index level volatility has been quiet because it's just been all the leaders are grinding higher, the AI trade, right? Well, in a market dump, so to speak, you're seeing correlations go almost to 1 because everything's getting sold, right? So it's kind of when that correlation spikes like that, you kind of know, okay, there's something different happening here rather than just a rotation. Anyways, the 3 weekly bars that we got on this topic, because the 3 weekly bars generally look the same. You could see the same thing here, failed the high, closes underneath previous week's low, back inside of this balance range. Are we pulling back from the highest high still? Yes. Is there room for a weekly higher low here on the Russell? Yes. I would say that this trend count here, as long as that's intact, no problem. But is this generally a stronger failure with more room to the downside? That's where I would also answer that with yes. That's slightly different from the S&P and the NASDAQ, right? And the S&P and the NASDAQ were pretty much there at those equal lows. So on the Russell, I would really be paying attention to about 270s, previous resistance offering support here. If we could stay above that, you kind of have weekly equal lows and you're reaching an equilibrium. If you break below that, yikes, this starts to look more like a weekly trend reversal happening sooner than what we have in the S&P and the NASDAQ. And again, this actually was a little bit of a daily downtrend, or at least enough of a balance where this shelf is the firm weekly higher low. We have soft higher low over on the S&P and the NASDAQ. So therefore, this 270 is actually a really big deal for your small caps. Let's come in here with the Fibonacci's from the low up to the high. And as we could see, it is the Fib 38.2. You really don't want to start getting down underneath that. Let's go ahead and throw on our anchored view apps for the smalls. You can see in here as well, you don't want to be getting down underneath this. Anchored view app, the confluence of support we just talked about, very straightforward stuff. How about our volume profile? Come on now. Here we go. There's the weekly volume profile. What do we see over here? This is the highest volume node. It's kind of the midpoint of the range. That would be a great spot for a weekly higher low if it's going to sustain. So could be watching out for that level. That is about 277s on the Rusty Russell. Let's jump on over to the dailies and take a peek at kind of what that leaves us with. It's the midpoint of this range here. So if we could just turn on a dime, technically set an attempt at a daily higher low. Remember, no hourly downtrend here. The ideal situation from last week would have been this flags out. We know that the flags recently have been shaking. When I say shaking, I mean, see this in here. It swept the low and then came back in. This needed to break before it could go higher. We knew that this very likely was not going to leave just these equal lows. I was looking for a look below and fail in the 20 to remain bullish. Character change, right? Close underneath the 20 is certainly different here. Are we going to get something that looks like that? Maybe. But for now, I think it's very simple. Watch the levels, right? As long as you're over that 277 weekly higher lows in play, that would be a quick early week, red to green move back over Friday's low, some sort of move back to here, reevaluate at 286.75, bottom end of this balance range there. If you set the lower high and make the equal low, problems. That's your red flag. This is the danger zone under 270. It's that weekly inflection point we just talked about. If you're a bear, this is the path you want to see play out. Or if you're a bear, you just want to see this consolidate underneath 277.60 and then sayonara. Nice knowing you, right? That's a possibility there as well. For the bulls, my friends, let's try to keep this active as the weekly higher low. And then, I would hope after making a daily higher low, equal low, reattempt to the equal high, this is where things get constructive back in the upward direction on a reclaim back up through that 286.75. I would be much more bullish in terms of the general nature of markets here and small caps representing good old breadth expansion if we do actually see that configuration. Let's drop it on down to the hourly chart, and we could see that we have successfully range doubled from here. Whenever you have a balance range and it breaks, you typically look to double the range. So we've hit that target. If 280.25 just acts supportive here, and we'll see what happens in the subtle after hours right after Friday's close. It looks like we continue to sell. But if we do get some kind of an open on Monday back over near this level, once again, a red to green move, firstly for the counter trend, reevaluating if you get hourly high or low arbitrarily somewhere in here, equal high reattempt, that's bullish, right? If this completely fails back down to the equal low as just described on the daily, okay, we'll concede the point to the bears happening over there. So I think it really just becomes a matter of like, what does this bounce potentially look like if we go red to green moves across the market, and do we start to see daily lower highs being set? In which case, open-minded for two-sided trade, right? It's got to be two-sided trade, not just up, up, and away, buy every single dip that you see, right? Let the ranges set up. Let's jump on into let's go to the intraday anchored view apps. There we go. And see what's happening here. You're just tangled up in the mess. First target might be, instead of just looking straight back to the range low there for the lower high at 286.75, you could look to this 20 SMA. You could look to the moving, the anchored view app stack. It's going to be closer to about 284 if you want an additional level here on the IWM. We'll hit it for Confluence with the same Fibonacci's as well. 61.8 here, 38.2, kind of in the neighborhood of that 284. That works from the high down to this low. Same-ish thing, 38.2 in the right neighborhood, 50% in the right neighborhood. And from this low up to this high, how's the pullback looking? Not as bad as the others, right? In some of the others, we had moves underneath the 61.8, or at least the threats there for those lower highs. Not really happening here yet on the IWM. So from that perspective, a little bit better. The thing to remember here is just that Friday was the day this broke down because of what the labor report did, right? The stronger than expected labor report, meaning that there's no Fed support, means rates go higher. Small cap companies who are just kind of zombie companies, right? We always joke about half the companies here being unprofitable, relying on borrowing. Rates higher, small caps lower. So that is the narrative, and why Friday is ultimately the bad day, or the down day, I should say. If you're short, it's a good day. It's the down day for your small caps here. Let's jump on over to the Russell side of the market internals. Let's keep this thing moving forward. Let's see what we got. Huge volume outflows, not a shocker. Again, I think the NASDAQ's over-correlated to the downside. You're not there yet on the smalls. You can see that the cumulative build here is not as bad either. If we jump on over to the platform to take a look at the market profile for the Russell, lo and behold, it's the same thing. Multiple distributions. Point of control did flip to the lower third, if you will. And you could see, breaking down from this overhead value, of course, does represent a departure and a change in character. So a lot of the similarities here are exactly that. They're just similar. Let's jump on over into our sector watch and see what's going on over here. What I find most compelling is although it was a down week, obviously, and that Friday session is responsible for most of it, there's still some sectors that have green. I mean, healthcare is up 3.02%. That looks rotational to me. Now, healthcare is defensive, and I'd prefer to see XBI. We'll go take a look at the biotech chart in just a second. I'd like to see biotech lead that if you're going to get a little bit more of an edge on the risk on side, right? Genomics, at least, or some kind of biotech there. Real estate honestly didn't have a bad week. Looks like a bull flag on the daily. Financials didn't have a bad week. Remember, financials are neck and neck with the XLC communications for the second heaviest weight sector in the S&P 500. So, unless you lose all of this stuff, and there's a big character change on financials, specifically on Thursday. Wednesday you had the move lower. Thursday, the gap up to, higher and then go. Huge character change out of financials. Some of the banks don't look half bad, right? So those are your top three. Bottom three, of course, software, technology, Mag 7, semiconductors. Now, what have we been saying for weeks at this point? There's going to be a pullback at some point. You're going to pull back. You're going to look for the higher low. You're going to get sideways digestion through time. The market may rotate. I think it was a little aggressive. I certainly was not prepared for the magnitude of down day that happened on Friday. I don't think many people were at all. But to think that the market was just going to go in a straight line forever, a little crazy. I thought a pullback, as we said already, I certainly want to acknowledge that, again, the magnitude here is way larger than I thought, but a pullback in here, I was like, yes, thank you. Come on, bring the pullback. You can go back and watch the Wednesday video. It's like, please give us a pullback towards the 20, see if we can't set up something similar to what we had there. So point of this conversation is to say, during this aggressive pullback, there is still some rotation going on, and a primary amount of the downside came from profit taking in overextended semiconductors, technology, software, that whole group. Let's jump on into the XLV chart. I mean, gap and hold higher on Friday. Not going to say it's the most bullish looking candle there, but this once again speaks to at least some degree of rotation. If this pulls back and the money floods right back on over to semiconductors, going to be bullish, right? Let's jump on over to the real estate sector. Look at this flagging out here. Now, it's a lightweight sector for the S&P. I'm not going to say that this is going to move the needle, but if this can stay in the flag and break out, probably somewhat of a bullish underpin there. If we look at the XLF, this is that character change on Thursday I was talking about. Friday looked pretty, Wednesday. Wednesday looked pretty ugly. You're threatening these lows. You got this unfilled gap below. You're like, oh, geez, we lost the 50 SMA today. We closed week underneath previous day low. We're down on the week here. The gap and go on Thursday, I'm getting my days all twisted, is like notable. I'm not going to say it's out of the woods. You're still just in this balance range, but this is a big savior bar on that XLF Thursday. And once again, speaks to rotation. Even if you don't like, say real estate doesn't move the needle for you. It's too light for the S&P. Say healthcare is defensive. Okay. Financials, you can't really argue here. It's a heavyweight component for that market. Definitely speaks to more broad-based rally and a risk-on environment, right? Let's jump on over to these industrials. I thought that the Thursday bar was interesting. Friday not down too bad. If this can catch a higher low, you're just trending higher there over the 20. Not overly problematic. Energy, you typically don't want to see outperforming the market. So, this is a little bit more of that bearish rotational tell, but it's doing what? It's just in range compression here. So I still think that this is above my pay grade to be getting involved in those energy companies with, is the war coming to an end, right? There's a number of different theses there, but too many headlines to want to get involved in the oil companies. Personally, I understand that the technical charts look fine, but I think you're just trading on the whim of whatever happens with the Strait of Hormuz. If we look at the XLP, this was interesting. I mean, defensive, yes, but staying in range, respecting the daily 200. I think you can have a lower high opportunity here. If you lose everything, that's where I'd be more like, okay, let's deeper pullback in the market. If XLF gets broken down, if XLP gets broken down, like through these lows, if the XLF gets lost through the gap through here, that's where I'd be like, yeah, deeper pullback weekly is probably closer to 700 versus that 712. We'll go from there. But for now, this is like some pretty constructive stuff on XLF. XLI doesn't look half bad. Energy, the chart doesn't look half bad. I don't like being in that group, but that's fine. XLP doesn't look horrible. I'd be more concerned under that 80.75. Utilities trying to snap back here. It's a lightweight defensive sector. You don't want it leading anyways. It's kind of picking up some of the slack, at least rotating to stay green on the week. Here comes the bottom of the barrel. Cover your eyes. It gets a little gnarly here. Does it really? I mean, honestly, after this huge breakout to come into the daily 20 SMA and the previous left side peak here that you broke out of, too far, too fast, settle it down. Can we tighten up in here, offer some more respectful entries and just like get a more decent grind to the top side? Maybe, right? So IGV could get interesting. I mean, I don't know about you, but I'm seeing the narrative float around online that like, oh my God, AI is going to replace all these workers, software engineers and whatnot. It's like, okay, we fired all the software engineers, only to realize that the cost of tokens is going to be equivalent, if not greater, than just having a software engineer who uses AI than trying to do it all with some sort of like agentic system or something like that. So that's one argument here that software maybe comes back a little bit, right? So I'm really interested in this higher low opportunity off of 94.50s. Usually 100% retracement doesn't just go straight through the lows. You'll at least get some kind of a lower high if you reject the 200. That could be problematic if it comes in more deeply, but if this can set us up for some tight price action, I think it's worth trying it for some potential of a higher low. We'll get more into this as we get through the trade ideas. Just because some of these pullbacks look really good doesn't mean you should just go out and try to buy all of the first pullbacks that we're seeing. This is something we'll talk about through the individual components, but I do, just in case you don't make it that far, if you've made it this far in the first place, you probably watched the full video anyways. Everybody in the beginning is probably missing out on this comment here. This is like the start of the pullback. The market hasn't shown us a single tight day here. We're not just going to assume that this pullback is it and it's going to bounce off of Friday's lows, right? We've talked about the red to green move being the setup for a potential counter trend, but to really set up a next leg higher, it would be great to get some, tight price action, a day or two or three or five or whatever. You're sideways, you're building out this base thing, and then you can, okay, I'm risking off these lows. We're trying to get back to these highs. You understand the structure of the trade. You have leaders that are leading again. You don't have the leaders cracking. So just want to be clear that because we have a nice pullback in an uptrend does not mean just like go blast everything long on Monday. I think IGV is a great example because it looks like a really attractive location, right? 94.50 here. Anyways, mini rant over. Let's go on over the XLK. Obviously the most damage over here. But once again, like, what is this? This is a raging uptrend here. Flag, 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 tried, failed, just pulling back to the last flag high. I mean, you're not going to go up in a straight line forever. Finally, that day has come. I mean, respectfully, it would have been more like this, somewhere gap fill reversal off of this high. If the thesis, was going to just continue to rinse, repeat, rinse, repeat, rinse, repeat, what do you do in a bull market? You do what's working until it's not. So Friday is the day that it's not. We'll see if we do support over this left side peak of this flag. If we could do that, right? Where's our new base? Where's our weekly high or low? How do we get out of this thing? Is it this buy over here? Is it the look below and fail and the shakeout at the range low? Those are the things that are top of mind. If this is a hot knife through butter, I should say, that looks like this, yeah, character change, seriously gonna, have to reevaluate. You're not gonna need like a week sideways. You're probably gonna need 2, 3, 4 months sideways down here, right? Before the next thing is ready to rock. And I get it, that drawing only goes for like a month and a half, but you get my point. Moving along to the Mag 7 ETF. Brutal breakdown of this not head and shoulders, but double top. We had talked about that as a threat, and there you go. You kind of have your breakdown through that level, no support over the left side peak. If we go red to green, you just want to trade this thin structure and really focus on 67, 68.20. Let's jump on over to the SMH. Don't take a look at the stock sell unless you want to see an absolute murder crime scene. This is an overshoot, but is it going to set us up for, again, look below and fail of the daily 20 SMA? Maybe. I'm open-minded to that starting, but this is like 3 days down. This could, in one of those days being up, this is a 3-day pullback from the all-time high. It doesn't have to resolve like Monday. I just want to be very clear about that. I like the pullbacks that are setting up, but you might need to go sideways for a few days, a week or so. And if this is going to be the ideal weekly high or low, great, we are up and out. If you continue to get that Armageddon, maybe this requires a deeper build out of a range. Now, what I will show you on the SMH is if this does start to suggest head and shoulders, don't be the person who falls for the semiconductor head and shoulders. Why? You got it over here, right? There's your big head and shoulders. You got a down day, sayonara, the war ends. You go back even further. You look at, where was it? There it is. You look at this one and you're like, oh, look, the head and shoulders. Good night. Nice knowing you. Try again next time, right? So it tends to have this recurring pattern where when the head and shoulders sets up, maybe you shake out the neckline. But if the AI build out is going to be real, and this is, this is the logic behind why it never actually breaks to the downside. If the AI build out is going to be real, if NVIDIA is still going to be a money printer, if Google is going to be buying all the chips alongside Microsoft and Amazon to build out these data centers because AI is something that they're investing in, right? These companies will have revenue flowing over there, right? It's just, it's too big of a story to actually break the technical pattern. So just keep that in the back of the brain. If the story starts to crack, if like, okay, we're not gonna be able to fund this, or we're not seeing the dollar show up, or profit margins are shrinking, NVIDIA is not at 75% margin anymore, maybe that's a different story, but we're not there yet. Let's go to the XLY. This is concerning. I don't like the equal low here. This to me seems like it is not stretched into a pullback location and like it's actually ready for more downside. You go lower highs in here and something that looks like that, problematic, right? You're just breaking from an overhead balance range. This is no good. If you look at the XLC, we had talked about this acting as a threat for a while, broke down earlier on in the week. I was kind of flippy floppy on it just because of the way that meta was just wildly violent last week. But undeniably at the sector level, it is lower with a lower high, and just overhead supply means what? Any rally attempts, right? This is just a daily lower high still, a weekly lower high still. You could just continue lower here. You could get the counter trend, that's fine, but the trend is undeniably down at this point. Instead of saying this is a bull pennant, right? You've failed that. This is a descending triangle, and any lower highs that remain below are problematic. Let's go on over to the XLB, the final and lightest weight sector of them all, doing nothing wrong in the midpoint of this range. Pass, no hard comment over here, just is what it is. Let's jump on over to the ratios and just get a feel for risk on, risk off. If we take a look at this, if you're not familiar with ratios, by the way, check out the video tutorial in the top right-hand corner. The glue that was holding the markets coming in, clearly. I love that the XLF is bouncing here. Once again, we spoke about rotation and XLF, as long as that's doing okay, I think we're all right. I do think the XLC is problematic. This looks like it could set a lower high, and I do think that the XLY is problematic. So still a mixed bag. This trend is not broken yet because you have not taken out this left side high. You have not made a lower low. You're pulling back from the highest high. If this does start to flip and flop and falter, problems. You could see risk off starting to really accelerate on Thursday, Friday, really here in healthcare, staples, and utilities. Not as bad in utilities, but healthcare definitely. I would just come on over to, let's go look at the XBI. We did not take a look at that chart. Still doesn't look as bad. I would love to see this ultimately be some kind of a range that we could flag out of on a weekly chart. This monster flag trying to get the new range up here to go up and out, thinking about the beneficiaries of AI and not to get too, story or theme oriented in the technical portion of today's show. But, who outside of the data centers, like what are we going to use AI for? One of the biggest arguments is just like drug discovery, right? So, can we cure cancer with AI or whatever? So that is a huge part of it. XBI, I think, is bullish still. I do like the narrative behind it, but it's time to start seeing, more of that narrative actually play out. We'll see. Let's jump from the XBI weekly back over to those ratio charts, specifically looking at the AB sets. You could see here the pullback is everywhere, right? It's in these as well. Nothing has broken too much in the top quadrant here. In the bottom, you can see that Kathy is not doing so well. Lower high still on the board, making equal lows. That's not a great look for the ARKK and your broader basket IWF, IWD, the Russell 1000 growth value comparison is breaking lower. So could there be a subtle rotation as the market maybe pulls back from growth into value? Yeah, of course. So your consumer staple names will be more of a beneficiary of that. Let's jump on over to the B set. No problems over here. The gold ratio looks fine. TLT ratio sharply lower, but still this rally there. It's just looking, I would think, seeking a higher low. You can see the Bitcoin chart is just broken, back down at the equal lows. I would expect some kind of a bounce, a little bit too far, too fast into the end of last week. If we can get a lower high, equal low reattempt, that's likely where it's lower. Let's see, as long as this Sailor Shift tool remains on our sell signal, you just primarily want to keep a little bit more of that bear bias. Let's jump on into copper. Little concerned here. I really wanted to see that Thursday session offer the higher low. That's the candle. The white line is the S&P 500. Really wanted to see this act as your stair step higher, just making an equal low on copper after an equal high in here. I think you're balancing now on the range rather than continuing the uptrend. So if it breaks the lows, that's a red flag. If we just remain contained in balance, it's a little bit more digestible, so to speak, for the market. Let's go from the B set over to the dollar and interest rates. This was a huge part of the narrative on Friday, of course, driven by the stronger than expected labor report. But there you have it, the dollar breaking out in the upward direction over 99.50, huge headwind, specifically for, if you really want to peel back the layers of the onion, and if you've made it to this point in the video, then congrats. The dollar puts pressure on what? A higher dollar, foreign markets, right? And we know that the memory trade and a lot of the chip names come from South Korea. The Kospi over there, if I just jump over, oh my goodness, I'm going to have to find the leveraged version of, hang on, let me find the leveraged version of, oh boy, leveraged version of Korea. Hang on, it's on a list over here. I've got it somewhere. Got it somewhere. I think in the meantime, let me throw up over here the EWY. EWY had a nasty sell there. What is it? Is it KOUR or something like that? KOR, it's probably KORU, knowing the way that they name ETFs. Yes, there we go. Direction Daily Shares. Hello, I'd like to report a problem. This is down approximately from the peak over the span of 5 trading days. Oh, a cool 52%, literally cut in half over 5 trading days and really exacerbated on Friday. My main point of getting here is that, why is the market pulling back so aggressively? If you want to try to put the pieces of the puzzle together, the narrative is stronger dollar here, weaker foreign markets, and thus, your Kospi, your South Korea market, which is heavily involved, think SK Hynix, think Samsung, right? All these names that have been bananas, like excellent to own this on the way up, but dangerous to own it on the way down, thanks to your stronger dollar. Anyways, there's the illustration. Rates back over that 4.5% mark. That's where good old Scotty B starts to make note. So I wouldn't be shocked if we start to see some intervention over the weekend or early next week from Besant and the Treasury. Let's jump on over. We can take a look at the inverted ZT. We know that this is higher, just pushing up the probability of rate hikes sooner rather than later. Here it is on the Fed. Whoa. The CME group giving us a warning. Maybe the stock was down too. Oh my goodness. Was the stock down too much? It was down too much. Okay. Well, it looks like the tool is broken. If we just jump back on over here, again, not throwing any shade at the CME, but if you go to CME, right, the CME group, yikes, maybe the data feed's getting a little tough to pay for, moving from 280, 284 down to about 245. Well, I would just tell you that the odds of a rate hike have been pushed into December. And that, of course, is further up after the strong labor report. If we could just jump over here, you could see there it is, 172,000 jobs added versus the 85,000 expected. No change in the unemployment rate, no change in the hourly earnings. So Fed is going to do what? The main idea here is if the Fed has a dual mandate, here's our not triple beam scale, but single beam scale, labor versus inflation. Which one do they have to attack right now? It's inflation. So with labor coming in fine, they don't need to be supportive of the jobs market. They're not going to be cutting rates just for the fun of it, although I'm sure Kevin Warsh would love to. They're probably just going to remain put. Now, once again, I'll be the guy who tries to say, a Fed rate hike is not going to combat inflation that's driven by the Strait of Hormuz. You're going to need to see resolution of the Strait of Hormuz. A rate hike isn't going to sort of like put pressure, right? Or make fuel prices go down. That's not the way that's going to work. So I don't think they'll actually hike rates. I think Beth Hammock on Friday, did she speak on Friday? Or maybe I guess it was over here. Where's Hammock? Beth was saying on, maybe it was Friday, just an off-the-cuff comment that, I don't know, maybe the rate hikes will be back on the table. I think it's just posturing language rather than what's actually going to happen. Anyways, here's the earnings calendar for the upcoming, actually, let's go to the calendar for this week because it's a big week. We shouldn't overlook this. This is inflation on Wednesday. So coffee and donuts on me up in the office on Wednesday morning at 8:30. We'll start the live stream, of course, at 8 o'clock Eastern time as we always do. But 8:30 CPI data, inflation data on Wednesday, Thursday PPI, and then on Friday, preliminary consumer sentiment and inflation expectations. It's an inflation week next week after, of course, the labor report from this previous week. Here's the earnings calendar. Not overly interested. Fuel cell is extremely high beta and got crushed on the Friday pullback. Don't really want to get too interested in that. What else is capturing my attention here? Cracker Barrel, thanks for the old school logo back. That's great. Aside from that, though, maybe this sale could get interesting. Sale in the cyberspace is worth paying attention to. They snuck that one in down there. What else is here? Not Chewy, none of this stuff. Oracle is going to be the top dog, of course, to watch for our data center. And maybe Adobe for AI, although for software, hasn't really been great. Lennar home builders, perhaps, and we'll see if the ritzy folks are still buying $100,000 couches from Restoration Hardware. Let's jump on over to the earnings calendar, or not the calendar, rather, but the look at the estimates. I want to bring this up because those calls for, oh my goodness, this is a .com level crash about to hit us. .com did not have earnings power like this. I mean, look at this as an earnings power or an earnings growth story rather than a multiple expansion story, right? This is not just like, oh, wow, we really think that the revenue is going to be worth more in the future, so let's just really hammer it now. Look at your PE. We're less than the highs of 25, right? Your forward PE trailing in here is what? Like if I had to draw that over, 21.1 or something of that sort. It's not overextended at all on the forward 12-month. And it's really the earnings power that's been sending this market higher, which I think is completely different from the unhinged, no earnings, just say you're an internet company of 2000, right? It's just a totally different world. So just another reminder of that after we've collected more earnings data after last week. Let's go back on over to the platform. Let's finish this show up on a strong note. I feel like this is going to be a long one. I'm going to have to go back and double check the timestamps. My goodness. Bond relationships. Let's try to make it quick. Inflation impulse here on the long side, not doing anything. This is just telling us we have a strong labor market. Not overly concerned with that. If we look at the credit, it's nothing we don't know. If we look at the credit spreads, a little bit of an uptick here, but nothing that's changing trend. I'm keeping a very close eye this week, on market close day by day, whether or not we take out this left side. If we do, that would start to signal, okay, maybe the two-sided trade resolves lower. So just keeping that in the back of the brain. It's not a base case, but for now, it is a data point that I'll be paying attention to. Junk bonds in isolation, starting to show us, again, a little bit more of that divergence. Let me just quickly pull this to look like that. This was the dividend payout, of course, so really watching this equal low. If you blow that out, make a new lower low on HYG, I would be a little bit more concerned about, once again, a lower high on any bounces for the S&P 500. We'll keep that in the back pocket. Let's go on over to total breadth. We've already seen Bitcoin. Let's just jump this thing up to a full pane. New highs versus lows going red. That's interesting to me. A little bit weaker breadth there into the close, even though, as we'll see in just a second, the RSP, kind of a different look. The moving average chart didn't really do anything different into the end of the week. It just kind of bounced actually into the end of the week. Not a problem there. Let's cycle this way actually. Here's your RSP, right? Still plenty of room here to not do anything wrong and just provide support over the left side peak there at 205.50. Yes, a nasty down day, but this is still well within the confines of what I would have considered a normal pullback anyways for the equal weight RSP. If we look at the QQQE, not quite the same. We know that this thing has been a little bit more extended and kind of trading neck and neck with the weighted Qs anyway. The best spot to pull back and higher low would have been here. I think the next pit stop would be closer to about that 114. So a little bit more breadth deterioration on the NASDAQ side. You can see that it's holding up a little bit better on the S&P 500 side. Makes sense? Yes, of course it does, because as we know, there's no XLF representation in the NASDAQ. So seeing that in the S&P 500 closing up 2.1% makes total sense as to why the RSP is slightly stronger. Same thing with the Dow components as well. Some more industrial names in that Dow. Let's get on over to volatility, where we could see a huge uptick in vol here, like right up off the floor, huge move. I don't follow the gamma flip line all that closely, but of course, as we were breaking down on Friday, we did move underneath the gamma flip line. So what does that mean? Instead of managers buying pullbacks and whatnot, they're going to be selling into selling and buying into buying. So volatility will naturally increase there. Big uptick in the VIX. We'd been talking about complacency effect down here for quite some time, and ultimately we got up off the floor, right? The Bollinger bandwidth of the VIX can't stay compressed forever. 16 is the floor. If anyone wants to go put the study on, you could just go look at what we've been talking about. Here's the VVIX moving higher, not in like, oh my God, duck and cover zone. That's over 120, but certainly an uptick off the floor. I don't think that's all that shocking, noting what happened on Friday. And then of course in here, I'm actually quite fond of the reset in the vol futures. It was almost too, dare I say, spready. If I just jump into the VIX futures here and show you this, see how this is a little bit more linear now? I mean, we were talking about just something that was like this, and then this into the back half. Too steep of a curve, which just signals complacency, right? More normally, as we've said in the past, this likes to hang out maybe closer to like 70 basis points to 100 basis points. Up here, we're at 261 basis points of spread between the front and back month vol futures. It's too complacent for the market, right? So it's been something we've been aware of. Again, I thought that the pullback maybe would have been a little bit more gentle. I was not prepared for the depth of the pullback on the Friday session at all. But to think that it was like smooth sailing, let's rip this thing all straight to new all-time highs. I think we've been talking about volatility, being a little bit too complacent for a while. You can go back and requote some of the streams if you'd like. Nonetheless, one-day VIX exploding. We'll see where this opens on Monday. If on Monday it continues to just drive us to backwardation and we get real sloppy real quick, then the buy signal will simply be when we reinvert back to contango. That is always like one of the biggest buy signals that there are for the market. So I'd be watching volatility very closely over the next handful of sessions. If we invert, the long is back through. If we don't invert, then guess what? You're probably just looking at, maybe more two-sided trade, but not an outright bearish collapse for the market. That is that. If you want to go look at skew, you could just see that nobody was really protected. You could see that this got up off the floor on the Friday session, but headed into it very complacent. Nobody was really pricing out a tail risk on skew here. Let's go on over to the regular charts. Let's rip through the core listed companies. This is where it gets a little bit more fun. I said 6 trade ideas in the beginning, but it's really more like 12 because it's 6 themes, if you will, but 12 ideas, 12 tickers. So congrats if you made it through this long video today. NVIDIA, daily 50 SMA is interesting. Left side peak is interesting. Back over here, I think we're in the neighborhood, right? If you do this as well, I think we're in the neighborhood of what could be a weekly higher low, but it's going to require some time. For now, you've got daily lower high, daily lower low. NVIDIA is just naturally in a downtrend now on the daily time scale. So I'd be looking for that same red to green 50 SMA bounce or something like that, but I wouldn't overstay my welcome. I think this is a trade all day long. This is a trade here, back to this, reevaluate, that would be your natural lower high. If you reclaim that, that starts to make things a little bit more interesting. Dare I start to say, this look going forward, maybe. We'll see. If NVIDIA loses the 50 SMA, let's go back to this daily chart, you're really talking about quite a bit of congestion back here. I don't know that I would love getting active in this range, but if you start to take out those lows at 197, yikes, now you're probably talking about the 200 SMA through some of this thin structure on the rally back higher. Right? So that is NVDA. Let's jump on over to Apple. Apple's not really all that bad. I mean, you took out the previous day low, you took out the container bar low from the inside bar, but you didn't really break down aggressively. You're still over the 20 SMA. I think Apple as defensive tech could just kind of like balance in here. I wouldn't think twice about it. If Apple ends up selling off more aggressively, lose the 20 and you get big range expansion to the downside, that's where I would take that as a little bit of a stronger signal to say, okay, more broadly speaking, defensive tech is even getting sold. Right now, it's kind of concentrated to like super high beta data, semiconductor stuff. We know Apple's not really in that game. They're not hyperscaler. I mean, they have Apple Cloud, iCloud, of course, but they're not really hyperscaler the same way that you would say Google or Amazon or NVIDIA are, right? Or, Meta, excuse me, are there. But so a little insulated. If Apple ends up breaking down more aggressively, that's a signal, right? That's kind of what I'm trying to get at there. Microsoft, just an ugly, ugly chart. Complete failed breakout under 430. I don't want to get overly bearish, smack on the lows of this 100% retracement. I think, funky zoom from Thinkorswim, gotta love it. I do think that there's some opportunity for a counter trend or, balance or chop in here. I just don't think it's as bullish as what was starting to shape up back here for the potential of a higher low after breaking out of this. So a tough look on Microsoft. I don't really see there being an active trade. Maybe look below and fail 412, lower high here, then reevaluate. Does it go lower? Does it kind of grind, go sideways? Do we have a new base to trade out of? That's maybe it. But the Mag 7s have not been getting any love. Let's go on over to Amazon. Amazon seems like the next one who's going to announce, hey, time to do an offering. Let's raise some cash. We'll get over to that with Google and, of course, Meta in just a second. Break of the daily double top neckline. This is exactly what the Mag 7 chart looks like, right? Closing week underneath the 50 SMA and the Wednesday low. You got thin structure through here. I think the danger is any consolidation that turns this into a bear flag, you want to be ready to rock and roll that through the thin structure for day trades and possibly looking out for, a 200 SMA bounce or something to set a higher time frame, higher low, and then maybe it builds out from there. But in the short term, absolutely bearish here. Nice rejection underneath that 255.50. Pretty classic. Previous support acts as newfound resistance. Heavy close on Friday. Let's go on over to Google. These guys did their offering after hours on Tuesday. You could see the stock never really made a new low after that, but you do have inside inverted hammer there. I would not really treat that as a bullish 3-bar play. I thought it had interesting relative strength on Friday. Obviously, it's the only green name on the watch list. If this breaks out, then that's fine. You could try to treat that as a long intraday, but what's the watch? I think it's just simply, where's your lower high under 381, 20 SMA barrels down, and kind of gives you a rejection there. So short term, maybe some higher action out of Google just based on its relative strength. But when you get here, I think that you're dealing with overhead supply. And if the market's still in a rut at that point, I'm speaking broad market, if the broad market's still in a rut at that point, I would be more open-minded to a rejection of 381, right? If the broad market's ripping the new highs, then fine, in here, higher lows that continue to build out, treat it for what it is and respect that reclaim right there. Broadcom, just ugly post earnings. Their earnings numbers, disappointing the market for sure. I think it was really the forecast of AI chips remaining unchanged for the rest of the year rather than an upward revision. So it gapped to the bottom end of the balance range. If you're a stronger buyer here and you're buying the dip on Broadcom, you're like, okay, decent close over that 408. I probably just want to see it drift through the earnings range. Pretty ugly as soon as you take out Thursday's low on Friday. Just kind of rejecting all of this overhead supply, and anybody who bought that gap down, definitely feeling it on Friday. Let's jump on over to this meta chart. This thing is just hideous. They, intraday, said that they were going to do their offering and try to raise some cash there. Really horrific chart from what looked like a decent breakout setup for a long through here to then failing to then okay, maybe it's back in play. Maybe you can consolidate here. Ugly close on Thursday though. Just horrific action out of Meta, breaking the flag range low. Ton of volatility in Meta itself. The idea for me here is probably, do we just accept underneath 601, 600 flat? And is there some kind of a way to trade this short after this just atrocious price action? I don't know that I want to be short in the hole after Friday. I would like to see a day or two sideways and then break it as a bear flag. If we come back up into range, there's nothing for me to do here. Let's jump on over to Tesla. Not immune from the breakdown. I thought that this was great underneath the 200 SMA on Friday. Congrats to those who got it. But great move under the 200. A little bit of a bouncy ball action happening there at the 50. Not really sustained for very long, but nonetheless on Tesla, breaking down from that 200 to me sets us up for a rolling kind of top. This thing has not led for a while. It really couldn't get in gear through any of this rally that we've seen in the broad market out to new highs. So I just don't know what to make of this. Are they selling it to go pick up SpaceX on Friday this upcoming week? I don't want to speculate too much on that. I just want to trade the price action in front of me. It doesn't matter what's causing the selling. This is an atrocious chart. Breaks the 200, weak close. Even if you go counter trend, lower highs under the 200 are shortable in my view at 415.50 in the short term to look for the equal low, and then continued breakdown underneath that really just sends this thing down into a grind. Let's jump on into JP Morgan. thought that the financials looked fine. This is sideways here and potentially up and out. If this does pull back, staying over the moving average stack, gap fill reversal sets you a higher low and is bullish for the S&P 500 overall. Watch your other big banks. Really a lot of leadership out of Goldman Sachs out to new highs. Not immune on Friday, but looks good in terms of its daily trend. Same thing with Morgan Stanley here, up at those highs. Let's go on over to MU. You can see that concentration of, the leaders really getting hit in memory, semiconductors, right? So big breakdown, no hold over this level, leaving an unfilled gap slightly above us. 20 SMA test right in this neighborhood. So once again, this chart does not look broken to me. This chart looks like it's a very aggressive pullback, absolutely. But is there logic, is there room to like hang out in here, close the gap, build out a new base, and then go? Yes. And I think we could probably just do it on, look at this, right? This is the same exact thing that you want now that the chart, I wouldn't call this a capitulation top or like a blow off top. We never really got that final oomph, if you will. But this consolidation after a huge extension, like that is what's going to set you up if MU is going to go again and memories are going to go in. You look at SanDisk, right? It's the same thing here. It's the same thing here. And right, maybe we're coming up on the same thing here. So that's the idea for MU. I think that some patience on this thing for the longer term accounts is great. In the short term for day trading it, absolutely against this 20, against this 820 level in terms of the technical structure, not the 20 SMA, but the 820 gap start. Gap fill reversal, reclaim. You have some longs there. You have a look below and fail of the 20, red to green move from Friday's session, start to rally back up through some of that thin structure, right? If you're looking for a little bit more confidence, a reclaim of that 891.25 previous low, something that does this and rotate back to the range high, something along those lines. Treat it as a trade first, intraday, shorter term trade first. And then if it is going to base, then we'll have something to do there. Let's go on over this AMD and see what's going on with AMDizzle. Failed breakout probably in the cleanest sense after that Wednesday up day. Thursday failed to get back over and close above that 523.85. Not as nasty as some of the others. I mean, don't get me wrong, down 6.64% is not friendly. I'm not trying to say that, but structurally speaking, this is, it's not doing anything wrong in terms of its previous pivots. It's right at the previous highs. It did not close this gap. I'd say that over here, what I'm looking for is a counter trend intraday and then a short up against this overhead supply if it's going to continue to sell and come into this level and, noodle around in here for a little while. So AMD is probably a watch for lower highs sub 485 as the first start to the week. Anything that sort of, red to green, fine, whatever. You want to trade gap fill reversal, try to get that long into the level. That's great. But when and if we get here, I would start thinking about, is there room for a lower high? Can we reject? Can we roll? Can we keep underneath the daily 20? Can we get a little bit stronger of a reset out of AMD? Let's jump on over this Intel. I like the weekly chart the best because this is like classic, or it was, I should say, classic 3-4 weeks tight, high tight flag. Starting to test the low end. So I'm pretty adamant on if Intel is going to remain in play here, you got to hold the Jesse Livermore number at 100. And ideally, we'd start to see like some kind of a buildup off the bottom end of the flag. Maybe it's a trend line, maybe it's just a look below and fail, maybe it's the 50 SMA catches up, something. If we get something in here to keep this range in play on Intel, I think that that's great. If we start to spend more time underneath 100, this is pretty thin stuff as we went gap and go. It would just become a little bit less compelling, right? So a lower high under 100, I don't want to say the chart's dead, but I definitely wouldn't be as convinced on the momentum look for a high type flag breakout if we start spending more time underneath. So you got a very quick opportunity to get back above early on in the week, watch 100 the Livermore number, and then we'll take it from there. Speaking of names that look okay, SanDisk, I know we looked at it briefly in terms of just kind of walloping out these ranges here, but take a look at the move into the 20 SMA. I don't want to say it's a tame pullback because nothing was really a tame pullback on Friday. This is down 7%. That's from the open, not including previous day's close. There's not like it's a tame pullback. It's a very sharp pullback, but I do find it interesting that it came into the daily 20, found a little bit of support and closed at the 20, right? This has not gotten a daily close under the 20 since this last consolidation. So, if it's going to just be a kiss and go, I think you could probably watch this red to green narrative on SanDisk to at least start a trade. And then if it turns into more than great, you're not really, at least I'm not, I'll speak for myself. I'm not trading options on this thing. I'm usually going SNXX, the levered version, The 2x lever just split, by the way. And we'll see if it can't get picked up off that 20 SMA to start as a day trade. If you could hold some of it as a swing trade, then fine, but not with options, right? And there's plenty of leverage here with 7% ATR on the underlying, but this is going to be a little bit more approachable in terms of number of shares that you can actually buy if you want to be buying in nice round lots and whatnot. Anyway, SanDisk. Nicely done over here. I think this is potentially tradable red to green move. Let's go over to the data center names. NBIS is the first up on the list. I like the NBIS, and I actually bought some NBIS on Friday. I like the hold of the 20 SMA. It looks like a tame pullback. Again, not sitting here saying that 7.72% of the downside is comfortable to hold through. It's not the argument at all. What I'm trying to say is this is not doing anything wrong as it relates to the trend. It's not doing anything wrong as it relates to the pivots. Again, red to green move here, reclaim of this 230, 375. Do we come up on, an equal high retest? 277s, maybe, right? So NBIS, in my view, could be a watch on the long side, controlled pullback, just a gentle breach of the previous day's low, 20 SMA support, Brigade bolt there, over 230, 275, not bad. If we look at Oracle, right, for the IGV, we talked about this a little bit. IGV was coming into the 20 SMA. It's the same look here on Oracle at 200 on the retest. Big reversal. They do have earnings this week, so it's going to be very hard to get any cushion here on Oracle ahead of earnings. But if we could find some kind of a constructive setup here, if earnings aren't going to be, I hope it doesn't gap. I hope it stays near the level, or at least keeps the setup in play. I'd just love to see something on Oracle in this neighborhood there for some tight action that's potentially higher lowable after this big high. Right, nice reclaim of the 200. Can we set up a higher low, continue this nice, even keeled uptrend? It doesn't have to get to here in the blink of an eye. It could be a couple days, couple weeks. I guess is what I'm saying. It doesn't have to be like, boom, 3 days and you're there. Couple weeks, nice respectful uptrend. Let things cool off. Just let things normalize a little bit. So Oracle, we'll see that. If it ends up gapping down on earnings and we're down here, it's probably just going to be off radar for a little bit until it resets up. CIFR in the group also doesn't look half bad, noting the close at the 20 SMA. Respectful a little bit of these previous left side highs, not saying 8.5% or 8.35% is easy. Obviously, none of this stuff has been easy mentally as you're looking at the P&L and whatnot, if you're swing trading this stuff. But the point is, it hasn't done anything to break the chart. You got lows, higher lows, higher lows, higher lows. I think data center still looks good. So there's your CIFR. Here's your CLSK. I won't keep harping on about like nothing's broken, but there's the number 1515. Look at the rally back into the close there. CLSK, are you kidding me? And then what about BTDR? There we go. BTDR also looks pretty good over this 1510, right? You got this nice, call it cup and handle, inverted head and shoulders with the left side, pullbacks that are gentle over that 1510. Data center, crypto miners. I think the WGMI, right, is the general ETF. There you go. Same idea. You got this nice base. Is this just a gentle handle that's building out? Obviously, the volume looks scary. It's a heavy day on Friday. We're not just putting, market order buy as soon as the market opens up on Monday at 9:30. But if these things start to set up, the data center space does look pretty constructive still. As mentioned in the intro, like gnarly day. Some charts are just outright broken. Think about a Tesla. Think about a Microsoft. Think about a Meta. Mag 7 doesn't look good, but data center still looks pretty good. TSM, I think a look below and fail of the 20 could get you long back up to this high if the Friday session is going to be, read through as an overreaction panic. Look below and fail. Red to green move there on TSM looks good. The trend here is still up. Let's go on over to a Robinhood of the world. This is interesting because I think it's building a new range down here with the PDT rule sort of going away. Does that change things? Maybe. I like this higher low opportunity set in here. I think it's still an old leader that's a little bit broken as of right now. It's, these 2 up days immediately came in. It's not like you got follow through and you're over the 200 SMA. You're still got a downward sloping 200 SMA. I'm not saying Robinhood's like the prettiest chart in the world. I'm just saying I'm making note of this higher low stair step over the moving average stack. Not really that bad on Friday. I mean, this hardly closed underneath the previous day's low. So that's Robinhood. Next up is in some cyber, CRWD, CrowdStrike over here. Post earnings, which is great. They have a split upcoming now that the stock is like off in Never Neverland. Another one where, just like Robinhood, I look at the previous day's low and I'm like, this didn't do anything on Friday. It didn't sell off at all. And we know that this theme in this group has been absolutely on fire. Is there room for a broad market continued sell that pressures CrowdStrike to look below and fail the 20 and reclaim back out to the highs, setting a daily higher low, a weekly higher low in the count? Maybe, right? So I'm interested in that CrowdStrike. I'm interested in this Fortinet as well. FTNT is the other one. Again, like you closed inside of Thursday's range on Fortinet. Are you kidding me? It's extended for sure from the daily 50, but look at this range up here. I think it's a very straightforward 150, nice psychological number. Pair that with just the idea that you got 1, 2, 3, 4, a week sideways up there at the high. I mean, the weekly bar is going to look like a doji, of course, right? If you just take a look at this, there's your inverted hammer. So I guess it's inverted hammer, not doji. But you get your inverted hammer. Maybe it's a shake to close the gap. You buy this off the gap close, the 20 SMA confluence. That gets you in early, and then gravy is on top of 150. Like this cyber theme, I think, is great. So CrowdStrike and Fortinet, definitely the two names that I have on my radar. And then lastly, CCJ. This one could go either way. The uranium, if I go URA real quick, did not fare well on the Friday session at all. You drop the moving average stack. This is kind of like a lower high there. You're kind of losing your higher low look, right? For some rough trend lines, if you look at quad U's, right? This, of course, breaking down meaningfully underneath the lows. So the group isn't necessarily acting well, but CCJ, I just think, is a little bit of an interesting opportunity to do something off of the 200, right? And when I say daily 200 SMA, I'm also talking about $100 flat as the psychological number there as well. So once again, if the broad market pulls, you look below and fail that. Is there a red to green trade on CCJ? Maybe. Maybe there's a red to green look below and fail trade here at the 200. You do have a lower high coming into it. I'm not saying this is the prettiest, like, no-brainer long that I've ever seen. I just think it's a chart that you would want to keep an eye on. So that's what I've got for you in today's episode and installation of the weekly watch list. We covered quite a bit, given that the market breakdown there on Friday was probably throwing a lot of people for a loop. Hopefully you've made it through the video all the way. If you did, let me know if you learned something or enjoyed the content down below in the comment section, or by giving the video a very simple thumbs up. As we say every end of the video, we will be live every morning at 8 a.m. Eastern time for another episode and installation of the pre-market prep here live on the channel, building you a game plan for the day ahead. Hope to see you on Monday morning bright and early. We'll see where those futures are slated to open and what the game plan looks like. More downside, upside, counter trend, more than a counter trend. We'll figure it out on Monday morning. Enjoy the rest of your weekend. Stay green this week. And as always, I will see you in the next one.